NIO closed the pre-holiday session at $5.46, down slightly after an intraday reversal that saw the stock reach as high as $5.70 before fading into red territory. With the markets now closed for the Thanksgiving public holiday in the United States, the attention shifts away from the day-to-day price movement and toward the developments happening behind the scenes. Although investors cannot trade today, the company itself has continued moving forward with strategic milestones that could shape the direction of NIO's business over the next several years. These moves are easy to overlook during periods of stock volatility, but they remain critical to understanding the broader picture. One of the most significant developments recently is the progress around NIO's sub-brand Firefly. Firefly has been designed to target the mass market and small vehicle segments, offering a more affordable entry point into NIO's broader ecosystem while differentiating itself from NIO's premium brand identity. The company confirmed that Firefly has officially begun right-hand drive production, and the first batch of Firefly vehicles is set to be shipped to Singapore. This signals the beginning of NIO's expansion into right-hand drive countries, a step that opens multiple potential markets beyond the company's existing footprint in China and continental Europe. The right-hand drive shift may not seem like a major financial impact today, but it represents a meaningful structural development. Right-hand drive markets include countries such as Australia, Japan, the United Kingdom, New Zealand, Singapore, India, South Africa, and several others across Asia and Africa. Many of these markets are growing in EV adoption, and some have governments that provide incentives for electric vehicle purchases. This gives Firefly an opportunity to enter markets where smaller, more affordable EVs are in high demand. With Firefly targeting these segments, NIO could position itself in regions where consumers value price, efficiency, and compact design. This is an important strategic move because NIO's premium vehicles, including the ES6, ES8, ET5, and ET7, are not necessarily suited to all global markets. Some of the right-hand drive countries value smaller models due to road constraints, parking limitations, or consumer preferences. Firefly addresses this challenge by offering products that are tailored for smaller footprints and entry-level price points. This expansion represents a diversification of brand identity that allows NIO to reach customers across a wider spectrum while still benefiting from shared platform efficiencies, battery infrastructure, and technological architecture across brands. The expansion into Singapore also demonstrates NIO's approach to entering a market that is technologically advanced, highly regulated, and considered a gateway to broader Southeast Asian demand. Singapore is known for its strong EV incentives and its early adoption of electric vehicles relative to other nations in the region. For Firefly, entering Singapore provides a strategic testing ground for right-hand drive markets and could serve as a launchpad for future expansion into Malaysia, Thailand, and potentially Australia or India. Even though the immediate financial impact may be limited, the long-term strategic implications are significant. Another notable point is NIO's continued strength in vehicle deliveries. The company reported record monthly deliveries in recent months, including more than 40,000 vehicles in October alone. This includes deliveries across all brands and models. The ES6, in particular, surpassed 300,000 total deliveries, making it one of the most successful premium electric SUVs in China. Deliveries remain one of NIO's strongest performance indicators, showing that demand for the company's vehicles has not disappeared despite market challenges, economic headwinds, or pricing competition. The delivery strength underscores the broader stability in NIO's customer base. Even as the company works through margin pressures and cost challenges, consumers continue to choose NIO for its design, battery swap ecosystem, software experience, and brand identity. This highlights a key distinction between company performance and stock performance. While the stock has experienced downward pressure in recent weeks and months, the company continues progressing operationally. This divergence often occurs in periods of macro uncertainty when sentiment influences stock performance more heavily than fundamentals. This divergence is particularly pronounced for Chinese electric vehicle stocks, which have been under considerable pressure due to macro factors such as economic slowdown, regulatory concerns, competitive pricing, and geopolitical considerations affecting Chinese ADRs. These concerns create volatility even when companies post strong delivery numbers or release meaningful operational updates. NIO is not immune to these forces, and the recent price decline reflects broader uncertainty rather than deteriorating company performance. Another point weighing on the share price is the cautious sentiment heading into the next series of financial reports. As investors anticipate future earnings, questions persist about NIO's path toward profitability, its ability to improve margins through cost reductions, and how it will manage capital expenditure related to expansion and infrastructure. Investors remain watchful of near-term cash flow trends, even while acknowledging that long-term growth potential remains intact. This creates a scenario where stock performance may feel detached from business execution, especially in the short term. The Thanksgiving closure amplifies the focus on these deeper themes. With no intraday volatility today, investors have the opportunity to reflect on the structural news shaping NIO's outlook rather than reacting to hourly price changes. In moments like this, long-term developments such as Firefly's expansion and record delivery milestones become more central to NIO's story. These developments highlight the company's commitment to growth and its strategic positioning for the coming years, even if the near-term trading environment remains turbulent. As NIO moves toward new regions and prepares for future product announcements, the multi-brand strategy becomes increasingly critical. The Firefly brand is only one part of a broader effort that also includes potential future models under existing NIO branding and the expansion of battery swap stations in Europe. The company has invested heavily in infrastructure, software, and brand identity. These investments are aligned with NIO's goal of becoming a global player in the electric vehicle market, not just a regional manufacturer operating solely within China. The global EV landscape continues to grow, with major markets adopting new policies that support long-term electrification. As governments push for lower emissions and consumers adopt electric vehicles at a faster pace, companies like NIO have opportunities to expand. Firefly's entry into right-hand drive markets is part of this shift, as smaller, more efficient EVs will play an essential role in emerging and mature markets alike. While premium vehicles remain important for NIO's brand at large, Firefly helps capture demand from price-sensitive regions, expanding the total addressable market. This holiday period therefore represents a moment where investors can look beyond the day-to-day volatility and focus on what NIO is constructing behind the scenes. While the stock remains under pressure, the operational progress provides a counterweight to the negative sentiment. This combination of short-term weakness and long-term potential creates an interesting contrast that investors and analysts will continue to track. Looking at the stock's recent price action, the recovery attempts earlier in the week showed that buyers are willing to step in at certain levels, but the lack of momentum later in the session revealed that confidence remains fragile. The current price in the mid-$5 range reflects this uncertainty. Market participants are cautious, waiting for additional updates or stronger catalysts before initiating more aggressive buying. With the markets closed today and the week nearing its end, attention will turn to the next trading session to see whether NIO can stabilize its price, rebuild momentum, or continue navigating a volatile environment. The company's operational developments signal continued movement in the right direction, even if the stock does not yet reflect that progress. The coming days and weeks will be important in determining whether sentiment begins to improve or whether the stock continues to face headwinds from broader macroeconomic and sector pressures. Despite the uncertainty, it is clear that NIO is quietly building toward its next phase of global expansion. Firefly entering Singapore marks a new chapter for the company, one that points toward increased diversification and global reach. Combined with strong delivery numbers and continued infrastructure investment, these developments illustrate that NIO is not standing still. Instead, it is carefully positioning itself for future growth in a rapidly evolving global EV landscape.